Good morning, everyone. Obviously, Paulie has a problem with his microphone.
Hey, I can hear you. I can hear you.
Okay, because we couldn't hear you until now, mate.
Okay, thanks very much. Thank you. Yeah, I had
Okay,
my mic on mute. Thank you.
okay. Good
Um,
morning.
Good morning, and we're seeing this. What I was just mentioning to the guys and gals on the 95.65. One of the things that we're looking at yesterday on the cash dollar index, we said that any rebounds back to this 95.65. This is what we saw. This great rebound the prior week off of that 95.65. So any moves back to 95.65, we would look for as an opportunity to sell. And I did not think we would make it all the way this far back, but we did make it up to 95.62 right there, and we've started to rotate back again. We are seeing the euro came back, and one of the things we're looking at earlier in the morning when we came in, let's go and take this off. When we started the European crossover webinar yesterday, one of the things we were looking at is we were actually in a sell mode in the exponential moving averages. And one of the reasons I placed a little bit more focus back on these EMAs on the 30-minute is because of this whole idea we mentioned yesterday, the old 3 steps forward, 2 steps back, 2 steps back, 1 step forward. I mean, it just seems like these moves don't last very long. And one of the things that we'd even mentioned right here was on this 30-minute bar, how we'd come down here and we actually had our resistance at the time of support. It was right at 1530. The market stopped at 1534 and ran back almost 25 pips. And then we pointed out here that we quickly gave up those gains and really opened the door for the market to move lower. And we'd already got the exponential moving average crossover. And from there, you can see the rest of the day, the market spent on the defensive tone. Obviously, there were other things that came out that kept the euro under pressure, but there's no doubt, like I said, after a pretty good run here, we've had some pretty good success as far as just using the exponential moving averages, because the momentum, what we've seen, although not the same in other pairs like the Canadian dollar, but especially in the euro, there some of these moves don't stay very long, and why the exponential moving averages kind of keep you on the right side, or at least this one that I use on the 30-minute. And so we flipped up in that buy mode and stayed there. We finally crossed into the sell mode as the momentum turned lower, and it stayed lower all the way, going sub 15. Finally, we got things turned around. We're moving back, but you can see we've got some decent resistance coming in right there at 15.30 here. This was our line of support even yesterday, because remember we had mentioned this bar here where I said, boy, I would have liked to at least seen it come down to 29 and turn around. Well, it stopped at 34 and then rallied up nearly 25 pips, and then turned around and quickly gave up those gains right there in that same bar. Really opened the door for the market to remain under pressure. Well, right after that, we got the sell mode. We were talking about how close it was to a sell mode. I got the sell mode, and as I mentioned, the rest is history as we stayed weak throughout the entire session. It wasn't into the Asian session things started to turn around. They really did start to turn around a little bit quicker than at that point. 1507, we actually had our buy support at 1509. Pull this down here. Actually, 1508. Okay, 1508. So we did make that move in the session eventually. One of the things we were looking at the time was 1516. Well, we actually did come down, then we bounced a little bit, but the bounce was very minimal. And as I said, we stayed lower. Like I said, the focus on the show is primarily on the short-term moves that last for a day, 2 days. We'll go on and look, as I mentioned here on the cash dollar index. We saw a pretty good run here in the cash dollar index all the way back up, which was a bit of a surprise, all the way back up to 95.62. We talked about the reaction that we saw off of that 95.65, which extended far more than I would have expected. But one of the things that we talked about over the last week and a half was the phenomenal move that we've had here in the cash dollar index, but that for the last almost 3 weeks now, dollar bears have been reining in their positions. So once again, to bring that up again, is that we thought that this move was really going to be on fairly light volume and would open the door for us to get the momentum push on the downside. As I said last week, I thought that move would happen right on NFP, but we had a strong NFP, so that delayed it. It wasn't until after, once we got into Monday, things started rolling over for the dollar. We broke right at this 95.65. Our initial target was going to be 95.38. Well, we got even lower than that, almost all the way to 95. I think we had our support yesterday at 94.96, and we saw a very good rebound here, starting to give back up a little bit. Moving on to the gold market. Still holding up fairly well. Like I said, if you look at it on the daily, still holding up. One of the things that we've focused on has been, and generally don't look that far out, but we've talked about the weekly. Now, you can look at this, and we talked about that last week. I keep making the comparisons to the Canadian dollar. And remember, from a month prior, actually now it's going to be 5 weeks. Remember, we had that Canadian jobs report, and then we saw the dollar CAD really come down, and on a daily basis looked like it put like a gravestone doji, looked like it was set up for a move lower. But when we looked at the week, we said, well, despite that, we're still higher on the week. And after that, we got another 200 pips. Well, here we are with the gold. Once again, you can look at gold from the prior week and say, oh boy, we finished lower. But wait a minute, not lower, but this is looking like we got a gravestone doji. This market is going to turn lower now. But look, we still finished higher for the week. And so once again, those people that have been in those positions, are they getting paid from the prior week? Yes. From the prior week? Yes. Well, you may have said, well, the market made a run up here in the 1290, 95-ish, 97, and we came lower. But for those that are holding, are they still getting paid? Yes. So until they're still getting paid, there's no reason for them to exit out of their positions. So hence, we still continue to get the market to move higher. And we're looking on this on the weekly basis. We still have the door open for this market, especially on a dollar slip, to still take out 1300. I thought that was going to happen actually on NFP day. Once again, never expected that number to be so strong, and strong it was. But the door is still open for us to take out 1300. We're basically a spit away. This will be actually a great opportunity for any longs that have held on from this period here. Let's put things in perspective. On a weekly, gives a great opportunity for someone to go in. If they've been riding this the whole way, there's no reason for them to exit. We get above that and get to tick off to maybe 1307, 1308. Great area for them to say, okay, now I'll take my money off the table and walk away, wait for a pullback. And I think it just may get there, especially if the dollar does start to now turn lower. So although we've had some thoughts that the gold may turn lower, we're still holding up very well here in the gold market. Moving into the dollar CAD, well, we finally started to pull back. We saw a little bit of a rebound, but we're once again pressing a little bit lower on the downside here with the dollar CAD. Dollar yen, well, let's come back here. We talked about this during the week, and boy, this market acted like it was going to try and assault this huge break. We even marked it off as a pivot here, that 927, and really the market would be a sell on any moves there. Well, it certainly acted like it wouldn't even get beyond that. They made a pretty good push, and then within less than a day, we fell off 100 pips, and it's been a struggle back since then, even though the S&Ps have made a pretty phenomenal move back. Guess we pretty much got to the point of diminishing returns here with the dollar yen not being able to add any further on that, and maybe questioning the move here in the S&Ps. And we saw a pretty good pullback here in that dollar yen, off by about 100 pips from that level, actually more than 100 pips. So let's just go in and take a look at economic news coming out. We know that with the government shutdown, some of the news can be, I'm trying to think of the right word, but not a whole lot available. Let's go on and pull this here. Well, coming up at the bottom of the hour, we do have some UK data, GDP coming up, and we'll take a look at that. On the morning ahead, some of the data has come in a little bit weaker. We also have, oh wow, surprisingly, we're going to have CPI data at 8:30 Eastern. And let's move in further. And preliminary University of Michigan at 10 a.m. Eastern. Looks like the euro dollar is giving back some of its gains here. You see that importance of this 15.19. We've quickly gone and dropped down there. I had added actually here, I mentioned this in the chat room, down at the 14.95 and was looking for a move up to this 15.30-ish to dump out. Actually dumped out a little while ago, right up here, almost about 15.28-ish. And looking to go and reload. I didn't even notice we dipped down here. I'd like to go on and make a grab on there. I still think the dollar will start to relent, but generally don't like to do too much on a Friday. But if we can get that dip back down there, I didn't see this make this dip here real quick. Let's go on and take a look at the news, though, quickly. Canadian dollar keeps most of its recent gains as oil prices rise. The Canadian dollar weakened against its U.S. counterpart on Thursday as the greenback broadly climbed, but the loonie held on to most of its recent gains as stock and oil prices turned higher. Price of oil, one of Canada's major exports, rose to a nearly 4-week high despite fading optimism of a trade deal. The 3-month correlation between the Canadian dollar and oil has climbed to nearly 90%. You know, it used to be you could pretty much, if you didn't want to trade crude oil, you could trade the dollar CAD, and then slowly it lost that correlation. Well, it looks like that correlation is coming back in vogue. Let's go on and move on here to the Aussie and New Zealand dollars. The Australian and New Zealand dollars were on track to end the week with solid gains on Friday, buoyed by another promise of a policy patience from the Federal Reserve and news of a new round of trade talks on Sino-US trade dispute. The Aussie dollar was a fraction firmer at 71.91, having touched a top of 72.05. Hard to believe after that flash crash. That left it 1.2% higher for the week and a world away from last week's flash crash low of 67.15. The Kiwi was steady at 67.92 after it stopped short of resistance at 68.17, and the Aussie got a domestic lift from data showing retail sales just pipped forecast with a rise to 0.4. The risk to our Q4 consumption input into economic growth is now skewed a little to the upside, said Robert Thompson. Spending benefiting the increasing impact of November sales, including Black Friday. The major caveat is that it could represent some pulling forward of the Christmas time consumption out of December. Risk sentiment had already got a Philip when the U.S. Treasury Secretary Steve Mnuchin said Chinese Vice Premier Liu Hu will also most likely visit Washington later in January for trade talks. Waiting on the U.S. dollar was another round of dovish comments from top Fed officials. Chairman Jerome Powell on Thursday stressed the central bank would be patient and careful on the further rate increases. Vice Chair Richard Clarito said it would not wait too long before responding to a persistent slowdown in global growth before adjusting policy to offset that. And on to the dollar. The dollar slips on the Fed chief's patient comments. Dollar fell versus its major peers on Friday as investors grew increasingly confident the U.S. Federal Reserve may hit the pause button on the monetary tightening this year. Jerome Powell reiterated Thursday the U.S. Central Bank has the ability to be patient on monetary policy given that the inflation remains stable. Markets are now pricing in no further rate hikes. I really didn't say, and I mentioned that in the chat room, I didn't really see anything that was different or newsworthy in the dollar. Now looking here with the euro, pulling that back up. The only thing was, to me, the momentum has changed at the time, and it was clearly down at that point, and we spent the entire session just moving lower and lower, 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 and they pressed it for all she was worth. I mean, my goodness, we got down here, look at that, 1484 before things started to turn around, decent area here. I still think there's a good chance we can push higher, but once again, after we came off 70 pips, probably the market's using an opportunity to kind of lighten up, and to me, I think we'll start next week moving higher here in the euro, and really more so, and as opposed to being Euro-centric, I think it's going to be more about the dollar giving up those gains as we can now start to open the door. We're below that 95.65 here, and we started to open the door so that now we can make the next move, which I think will be lower, probably initially going to come down here, I would think, to about 94.23. So we're talking about another 100 ticks lower. The Fed funds rate is no longer accommodative, but neutral, and more importantly, positive in the real terms. In one line, with more patient Fed, the U.S. dollar rise becomes gentler. The euro gained 1/10 to 15.19 after losing 4/10 of its value in the previous session. The European Central Bank is widely expected to remain accommodative in 2019, which should keep a lid on the single currency. British Prime Minister Theresa May must win a vote in Parliament to get her Brexit deal approved, or risk seeing Britain's exit from the European Union descend into chaos. The vote is now due to take place on January 15th. The numbers are not in May's favor, and her chances of winning the vote look extremely slim. And on to gold. Gold prices rise as the Fed stance weakens. The weaker dollar and a more dovish Fed are the most alluring factors for gold, said Stephen Innes of Atlanta. The dollar slipped against other major currencies, the index having rebounded on Thursday from 3-month lows held by Fed Chairman Jerome Powell. Comments suggesting the central bank is not done tightening policy. A partial U.S. government shutdown extended into the 20-day and provided little comfort to the U.S. currency after President Trump threatened on Thursday to use emergency powers to bypass U.S. Congress to pay for a wall. It seems like it's been a long story, but I tell you what, I think it's only a matter of time before some of these things do catch up with the dollar. And the concern is, once again, we're starting to hear voices garner a little bit more volume about this debt with the U.S. So eventually, like I said, markets don't focus on something until they decide to focus. And when they focus on that, then all of a sudden it's all the rage. So we'll see, when this starts to garner a little bit more attention as far as U.S. debt. And when the market does, get the heck out of the way, because you've already seen what happened with equities once the market started focusing and, more on the downside, and the downside begets more downside. Well, I think the same thing could happen on the dollar. We might get a little bit of a scare, but so far the dollar's held up relatively well, although we're below that key 95.65. Once trade issues are resolved, the dollar is likely to remain suppressed, losing its appeal as a safe haven. Gold, on the other hand, would benefit. Also aiding gold's upward trend are concerns about weakening global growth, further emphasized from the somber data out of Switzerland and France on Thursday. Gold will need some fresh new highs to trigger price break to the 1300 level. 1299 would be a critical level for the further upside, with mild resistance at 1310. And that's what we talked about. I'm still looking for a potential move. We stress that here, where the market is triggered and gets up to this 1304-ish area. And I think we'll probably see something like 1307.8. Probably, you see it right there? Well, that's 1312, so I guess they could push up to that area. Probably look at a burst of selling. Then after that, you see the market start to say, wow, yeah, that's what you need to be in. And gold with the equities, and equities will probably take a downturn. And we've had a pretty phenomenal run up here in equities. I'm surprised. We're still holding up very well. I would have thought we started to rotate a little bit lower. I would still think this market will provide a little bit of give back, and that give back may take us, it seems like a long ways away, 95 ticks, but we should probably get, for starters, at least challenge just below this 25.50-ish. But the market wants to get a little bit lower. At the very least, we should come down to about 25.20-ish, I would think. I'm surprised we're able to still hold up at this area. And the dollar yen has since, is a doubting Thomas now, having come off of its highs. There was some talk about here. I posted this on potential for some additional spending being a concern down the road for European bond markets. It said there's not a stress for now, but eventually that could play into things, but that's for something a little bit further down the road. That being said, let's go on and get into the bias chart, and let's get the show going. So we're starting to come back a little bit here in the euro, and usually on Fridays what we like to do is we'll take a look at the overview of the week, and then we move from there. Well, we broke above this, and we were finally able to get above this 1470 area here. We'll pull this down here. Really opened the door for the momentum, really had the opportunity to push higher, and then we quickly gave a decent chunk, but we did defend this area. We closed above this 1496-ish right there. We're trying to push back. I think, once again, like I said, one of the reasons why I've kind of put a little bit more focus on the emerging exponential moving averages on the 30-minute, because once again, 3 steps forward, 2 steps back. These moves don't seem to last very long, and they quickly dissipate. And then we try and make another move again, whether it's to the downside, that quickly dissipates. But I still think that overall, Next week we can move higher in the euro. I did think it caught some people off guard. Me myself thought we'd push higher, and I was surprised to see us dip even below the 1500. But once again, we had the momentum, certainly working against the market throughout the day. Going into the 2-hour chart, well, resistance on a very short-term basis is going to be 1560. That's going if we can get beyond 1560, that's going to open the door for us to go on and move higher. We know that 1550 is critical, but we'll even tighten it up a little bit here. You see right there coming across right there. There's your resistance. Fifth for today, 1554. If we can get a 2-hour close above 1554, that will open for us to move higher. We're just kind of like in a waiting pattern right now, but we have recovered off the moves, off the lows nicely. And actually, we saw a little bit more action in Asian trading than we generally do. You know, a few years back, about 4 or 5 years ago, you used to see some decent action in the euro in Asian trading. And for the most part, it just stays relatively quiet. But yesterday or overnight, so we saw a little bit more of an upside, a little bit more juice. Not a whole lot, but more than we've seen in quite a while. It used to be in Asia, you'd see some good 30 pip moves back then. Several years ago, China used to be pretty active at the time. If you remember, they were trying to really displace the dollar as a reserve currency, and you'd see a lot of moves going into the euro. And you could always bet on some good, decent volatility during the Asian session, and that somewhat has gone awry and isn't the moves that we saw. But we did see a nice little recovery. Actually, I thought this morning off of that recovery, I thought we probably would have been pushing up closer to 1550, maybe 1560. So the European session stayed relatively quiet. And it wouldn't be surprised me if it stayed that way, because once again, this was really a disappointing move, I thought, from down here. I would have thought the market would have come down to maybe, remember we mentioned that in the webinar yesterday on the scalp low, might have seen 1516, even though we had to support it at 08, and then start to rotate higher. So it really kept that downside momentum. I don't see where the trigger catalyst could come through the CPI or maybe Michigan for us to turn around and jump up. But if we do, you don't want to get in the way. But it's going to be 1560, 1554 for the resistance. And once again, I do like the euro going forward as a counter to the cash dollar index. We talked about the euro comprising 56% of the cash dollar index, so they basically trade inversely. When we're looking at support, I should say. Let's take a look here on the 30-minute. Now you can see here that the momentum has changed. We got a little bit of an upside, and it's defending it here. We'll stay right here. We'll keep it right there at 1510. 1510 will be the support. So it looks like it wants to try and push up again here. And let's go move into cable. Well, we're just above this 2716. That's important here. Looking here at the daily. Let's go in and take a look here on the 2-hour chart. One moment. You can see the support coming in right there, 27.12. The market just nicked it and trying to come off a little bit, but certainly it's going to be a little bit on the defensive. Let's go and take a look at it here on a fib. Almost down to this 23%. We're showing right here, this is going to be support here just below that if we take that dip, 26.84. 26.84 coming across on the cable here. Well, we had 27.13 and the low so far has been 27.10. I'll just move this down to 26.84. You can see this coming across right there. Well, that's going to be resistance right there, 27.63. 27.63. This really accentuates the downside, and we've talked about that. You see where on the, we crossed over here in the exponential moving average. You can see the momentum pushing lower. We got a couple of pops above here, but we were still in the sell mode. Well, you can see here we flipped to buy and we quickly flip back to sell. That really generally you see an extended move. An extended move so far is what we just got on a short-term basis. We're looking on a 30-minute because the thought meaning we addressed this yesterday. So as the momentum starts to change, you get people to say, okay, now I'm ready to buy. I'm going to buy. And those same people that buy, as the market turns around, then you start to see them under pressure. And it's just a matter of where their stops are going to be. And so you generally, when you see a move like this, like once again, look at the exponential moving averages, you're seeing this, we're on a nice sell mode. When we flip to a buy and then the move quickly turns the other way, generally you're going to see an extended move. And for that very reason is because anybody that got long here thinking, okay, the momentum started to change, now we've got a bomb, they get long, and then as the momentum starts to switch, and then you have other people that say, wow, we're back on a sell mode, let me sell. Well, you just have that double play there. The people that are getting short because the momentum has changed, and those that got long, they're now getting their stops taken out. And generally what happens is when you see this, you have a nice sell mode, you barely flip to buy, and boom, you're back to sell mode. Generally see a bit more of an extended move. And, like on a shorter term basis, doesn't seem a whole lot, which is 45 ticks. But once again, after trading in a relatively tight range, when we flip back, then we push it, get a good little push on here. Let's go on and move in now to the Aussie dollar. This thing has been something else the way it's come back. I had stepped in front of this and I thought I was looking pretty good, and it did not come to play. This thing just kept on going higher at the time, and I got myself knocked out, and we pushed further in here. And they've really hung on to this news. I mean, obviously right now we're looking at some resistance here coming across at 72.66, but they've really stuck their teeth like a dog into a bone about this U.S.-China trade talks, even after they said, well, you know what, this wasn't at the ministerial level. We're going to go on and wait, and this market doesn't want to, give up its gains. We did see some decent data. It was saying from the Black Friday data. The concerns were it might even take something out of the December sales. But nonetheless, the market continues to not let up. And it's amazing how far we've come off these lows. You're talking about nearly 500 pips in just a week, not even a week and a half, just a week and a couple of days. So where's resistance? Like I said, it's going to be 72.66 coming right across there. We'll call it 72.67. And as far as support, you can see here on the exponential moving average, same thing here we talked about where you get that quick dip and it flips the other way and the market pushes it. Well, you can see here where it just kissed it right here and kept that buy side going high. This thing just doesn't want to give back its gains. Support on a short-term basis is going to come in right there. You can see all these little touches here. It's going to come in right there, 71.87. It's amazing to think about this when this market was under so much pressure to the downside. And one of the things I've learned with the Aussie is once it gets going in one direction, it's hard to stop. And it's amazing to think how far they pushed this thing down and how quickly now it's turned around and just does not want to give up any of its gains. Let's go and move into the Kiwi. Well, we got above that 68.01, and we're now pressing up here. Look at this 68.34. We'll take a look at it on the daily, and let's take a look at it on a fib. We've just got past the 61%. Oh, a little bit of resistance coming in. This market's already gone so far. 68.72 is pretty big, but hard to think they'd make it still that further, although they've been relentless in moving higher. Look at that. $68.45. Hard to deny this bullish bent at this point, at least on a very short-term basis. Support now would be right there, 67.67. Call it 67.66 for support. And let's go and move into the dollar CAD. When you look at some of these, I'm surprised that the euro isn't even stronger. I mean, the euro has its own problem, but I'm surprised when you look at the moves here with obviously they're moving for different reasons, but you look at the Kiwi, the Aussie, the dollar CAD. I'm wondering what the heck, how can the euro not be ticking up here, but actually above already 16? when you look at some of these other pairs. Obviously, it's moving for different reasons, but I'm just saying it's just not just one currency. Some support to be made about the commodity currencies. I think Greg has made a point about that, and so is, I believe, Steve also. But once again, like I said, wow, that being said, you have to wonder about the euro being down here. You would think in regards to that, you would start to see the euro. Although, once again, like I said, the percentage with the cash dollar index, but I'm surprised the euro isn't really close to 116, if not already above it. Maybe something we'll see next week, but unbelievable the move that we've seen, this downside move in the dollar CAD. I mean, nary a bounce. I picked it up early in the week. Sub 132 jumped out for a day trade, and the market moved pretty quick. I think it was out for about, I think it was at 35 or 37 pips or something like that. I would have thought we probably would have moved a little bit higher. I was going to, at the time I said I'll try and pick it up on a move, I think right at 132. I think the low was back like on the pullback. I think it was like only 32.8 and started to move back up. But here's the deal. It's already moved back down again. I'm surprised. It seems to appear to be no let up. That being said, obviously we're talking about the correlation with crude oil. This move, boy, what a move. When you look at it here on the daily, it doesn't seem like pronounced a move, but when you look at it a little bit, on a short-term basis, and this isn't that short-term, 2 hour, it's phenomenal. The move that we've come back $10 off of the low. So obviously some good reason why the dollar CAD continues to remain weaker. But man, I cannot even believe this rip back here in the crude oil market. Let's go and take a look where we stand here with the dollar CAD. Well, some weekly support coming in right there, 31.67. Weekly support at 31.67. Right, coming across is going to be 31.53. 31.53 on the daily coming here. So we'll mark off 31.53. Seems like a long way off, but resistance doesn't come in until 32.40. Certainly retains that bearish bent. So we're back above the pivot. And we had a decent recovery. You can see right here where this market has had a little bit of trouble right there, which is 98.37. I'm not even sure we even had the resistance that high. Yeah, we even had it 98.06. It was just above the pivot. Certainly with that sharp pullback in the dollar, that gave it some room. We'll take a look at it on the 2-hour. It stopped just below this 98.50. That will be resistance here. Dollar index was pretty oversold yesterday, but 98.50. Support comes in right there. 97.91. We haven't given up a lot, but that was a nice, I wouldn't even call it even a gravestone doji. The wick's not even very long, but right there. And we only came out just a little bit as we eked a little bit lower. I mean 98.07, which was basically resistance yesterday becomes support today. And we'll move into the dollar yen. We mentioned yesterday nothing's changed. The resistance being here at 855. With support coming in here on the dollar yen. Actually, on a short-term basis, remains in a buy mode. Support comes in right there on a short-term basis right here at this 818. You know, this was sending a bit of a mixed message when you think about where the S&Ps are. Look at that. And still trying to push higher. They may, as we close out the week, you're going to have that undertone bid because anybody that took the shorts is going to be pressed going into the week's close. And the market knows that. They know the people that are short are going to have to go in and cover. We'll probably keep that bid, probably trying to get above 26. So we're going in for right now, right there at 818 for support on the dollar yen. And we'll move into the cash dollar index. Well, we talked about earlier the significance of losing this 95.65, and any moves back to that would offer selling opportunity. We've come off that. I mean, we ended up to 95.62. This will be the resistance, 95.65. And as long as it's below, it's going to take a move above 95.65 on a daily close in order to, on a short-term basis, negate this downside action. It doesn't change it, doesn't make it bullish, but it would take a close above that to say, okay, well, maybe a little bit of a fake out. Then we'd have to get, in order for this market to try and question and to start to go back more towards a bullish move, we'd actually have to get a close above 96.25. But right now, the market remains bearish, with sells against 95.65. When we're looking for support, we'll go on and move into the 2 hours, see if we can see something there. Very close to that 31. Let's go into the 30-minute. Right here, 95.21. On a short-term basis, we have flipped back here to the sell mode. So I want to see how this plays out. Euro continues to stay relatively weak. As I mentioned, I think that yesterday's move really was disappointing for the market. We look like we had the opportunity to move higher. And we talked about this. We weren't that far away from the 61% at the time. And the market had a chance to move much higher, push up higher. And as we started to move lower, it really got the best of it as far as momentum, and it stayed that way. Now we flipped back here, market started to find itself past Asia, but I would have thought that coming into the European session, we probably would have been up here around 1550, 1560. So the market's just paying it pretty much close to the vest. Anybody that was long, on a very short-term basis, out of the market. We do have some houses that have gone with bigger positions. I don't remember which house it was. And I think City FX, I believe they're long from 1525. I think someone had posted with a stop below 1470 on a daily close. I believe that was it. So they're still in business right now. So, as far as the trade, I think longer term, the euro looks okay. It's just, once again, God, really disappointed. I would have expected this market to push much higher. I think next week, we may stay in this area. We'll see what happens with CPI and University of Michigan. But I still think going forward, we're going to be able to go and push higher. It's just really a disappointing move here that we weren't able to push much higher. And I'm looking at in context as an inverse play with what you mentioned with the dollar index. We did go on to make this move back up. As I told you, the key critical 95.65. Well, we came back up as high as 62. We rolled over a bit, but the market's holding here. And you have to wonder, after the disappointing move we saw in the euro yesterday, it's not as if the market's going to come back and people saying, hey, I want to put on those positions right now on a Friday going into the weekend. They may just say, I'll just go and hold back until we, get into next week, and we'll make that move and trudge into the euro again. So looking forward on here, not looking forward, but looking for today's support, 95.21 on the cash dollar index. We are, though, on a short-term basis in a sell mode here on the exponential moving average. And let's go and move into the gold. Now, I've made a case about the gold, still holding up very well. One of the things that we're looking for are the gold, and I couldn't figure out why this thing wasn't moving before over the last 6-7 weeks because of the volatility we'd seen in equities. Now, if you think about it, look, here's a phenomenal pullback here. We'll look at it on a 2-hour here, and we've had quite a run here in the equities. That being said, gold's holding up like a champ. So now it's kind of funny because when the equities were really falling apart, gold was just kind of holding its own down here. I was thinking, what the heck? Why isn't we seeing more of a movement into gold? And we alluded to 2 days ago. The story was, well, you're seeing investors coming in to buy gold. We just haven't seen that technical push. Well, I don't know about that because we're still holding up very well, which really leads me to think, well, God, if we've made this move based on just plain old investors coming in, an undertone bid, what the heck are we going to do when we break above? And that's the thought then, because you have to think about this. If we do break above the 1300 and then we see the equity start to rotate lower, well, you might end up seeing a real good push into the gold market if we are able to get that move above 13 and the pullback is only a little bit. Looking here on the gold market, as we talked about, we've seen this dip, but look, when you look at it overall, and this is on a weekly chart, are we not higher than the previous week? And it's not the previous week, higher than the previous week before that. It keeps the momentum still going higher. My thought was, although it didn't play out, which was last Friday, is that we probably see that break above 1300, but we got that good, strong NFP, which put some pressure on gold. And we pared back a bit, but we still finished stronger than the previous week. And we're still holding above the 61% here. So I still think as a dollar, and I think next week will start to move lower. We'll see if that plays itself out, though, but I would think so, is we really have that opportunity for us to move higher here in the gold. And I would not get in the way. I think that we can move up to probably spike up. We might move up to 1308. I said 1308, but when you look here, you got a little bit of resistance here coming around that 1312-ish. So I'm thinking we trigger these stops here. Then maybe the market pauses and comes back to about 1288. And then if it does and reasserts itself and moves higher. But I tell you what, I would not get in the way of this thing because there's still really the opportunity for us to move higher. And really the upside target is going to be this 1350 here. Overall, I'm saying looking out over the next, couple of months or maybe not even that long, but I think we can get above this. We can still make this move about 1300 because the momentum is still going the way of gold. So let's take a look at it here on the 2-hour chart. Here's on the daily. I just wouldn't stand in the way of this gold. It's got a lot of good things moving its way. And if it's holding up this well with the S&Ps up at these highs, what's gold going to do is the S&P start to roll lower. Now, once again, when everything was coming, when the wheels were falling off the wagon on the S&Ps, gold just wasn't doing a whole lot. It was just barely speaking hanging on. If you remember, we got up to like 1253, and then we quickly dipped back down. People started to sell it too quickly because, when we took that dip, I was like, well, wait a minute. We only fell to 1243. It wasn't even like we even got down beyond 1238, which was some huge daily support at the time. But that being said, if we start to go in and roll a little bit lower, it's going to do nothing but add a little bit more of a further bid into gold. So moving back in here into gold, we really have the opportunity to this market really wants to go above 1300, the way I see it here. So resistance today is going to come in. Boy, this thing, just the door just seems like it really wants to push higher. It's going to be right there, 1296. Got 1295. We'll move it up to 96. Well, we had support at 1286, and that's where it went to, 1286. So it's holding up really well. We'll keep that at 1286 for right now. And let's go into the bonds. Well, the continued upside move in the S&Ps has put some pressure on the bonds. Resistance on a short-term basis is going to come in there at 46.05. I like the support here, 44, right there, 44.31. Certainly got a pretty good push here in the bonds. And really up to that key area again, 64.10. We did make it up as high as 64.08. So we're going to go 64.10 for resistance in the bonds. That's that key breakout area. We're testing it again. And support comes in actually right here at 63.74. And on to the DAX. We are pressing that 972. Made it all the way back up here. We had 906, and look at that. And we turned around and just challenged it again. The whole thought, once again, that thinking process is just like we mentioned about the S&Ps. Anybody that's short, they know they've got them and they have to cover. But this 972 has been somewhat stalwart. So we'll go with 972 on the upside. A nice rebound, but I certainly wouldn't say it's bullish yet, especially after the huge move we had here. So we'll see how this plays out for the week. I'm talking about going into next week. Support. It's going to come in right there at 872, about 50 ticks lower. And there's a bias chart for today. I'll get that posted in the room. Euro's still under some pressure. And once again, after yesterday's disappointing move for bulls, there's not a whole lot of reason to jump in and chase this thing unless you can get it back on some dips. Dips anyway, any moves back down to 1510 will be, I believe they'll be well supported. But we'll see how CPI and if we get that, let's see with the government slowdown, which I guess we call it the shutdown. Well, we do have University of Michigan coming up out at 10 a.m. Eastern. And thanks for joining us here on the European Crossover webinar.